Welcome back to 𝐒𝐭𝐨𝐜, everyone. So again, going over my daily plan on exactly how I plan on playing into the SPY. As you guys can see, we do have a follow through, as we did have an engulfing candle last Friday after, again, 𝐒𝐭𝐫𝐤𝐝 mentioning that we could have a possible Fed pivot. Again, he is a Wall Street journalist that follows the Feds. He mentioned that the Feds have a possible indecisive move coming in after next week's Fed rate hike. So again, we're looking at this anticipation leading into next week's Fed rate hike. I'm going to go over exactly what we're looking for here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, as you guys can see, again, getting an engulfing candle last Friday after 𝐒𝐭𝐫𝐤𝐝 mentioning a possible Fed pivot, and as you guys can see, getting a follow through on that engulfing candle. Again, now testing our 50-day moving average here, looking to see if we do hold it, if we can continue to consolidate above our 20-day moving average, looking to see if we do get that clean breakout and hold above our 20 from here is exactly what we're looking for. Again, in my opinion, this confirmation will very much be Jerome Powell speaking next Wednesday. Again, that will be our next Fed rate hike, and in my opinion, that will be confirmation if we do have a possible Fed pivot coming or not, depending on what Jerome Powell mentions again next Wednesday at that Fed rate hike. Now, looking at our buy pressure, as you guys can see, we have been increasing in buy pressure. Again, we have that continuation on increases in buy pressure that we have been looking for, and again, continuing on higher. Again, just looking to see if we did continue on with our EMA lines pointing up is what we did mention, and as you guys can see, sure enough, still pointing up, showing us that bullish momentum. Looking to see if we can now get our EMA lines to cross above the median of our MACD. If, again, we do get a possible false breakout, if the Feds do not plan on pivoting, then we could possibly see a huge turnaround here on our EMA lines like we saw prior. As you guys can see, prior we did not cross above the median of our MACD. We crossed down below, and then we had to cross one more time before we did finally cross above the median of our MACD and had the largest rally of the year. So again, just being cautious, being open-minded here, and making sure that we do continue on with that strength. Now, looking at the RSI, as far as if we have room to run to the upside, again, we did mention over the weekend that we did cross above the median of our RSI. That was extremely bullish that we did mention over the weekend, and sure enough, we are continuing on with that strength. We are looking to see if we do continue on with this strength, if we can possibly jump back into overbought territory. Again, that very much will predicate exactly how we anticipate leading into next week's Fed rate hike and what exactly Jerome Powell says, of course. Now, jumping into the dollar here, again, the dollar has been the strength against the market. If we have weakness here on the dollar, then we get strength in the market. Again, mentioned over the weekend that we did close below our 20 when we just closed below our 20. Not once have we had that happen in quite a while here. So again, showing us that possible weakness. And as you guys can see, now we do have an inverted hammer here, showing us that rejection to the upside of our 20-day, showing us that we could be possibly curling down here. And if our 20-day does curl and cross down below our 50, that will be that ultimate strength against the market to give us that strength in the market. So again, we will see exactly what happens here if the dollar does continue on with that weakness. And if we do get our 20-day to cross here below our 50, as we have our EMA lines crossing below the median of our MACD, will give us that ultimate strength in the S&P. So again, looking for that possible strength in the market from the dollar. Now, lastly, looking at the UVXY, again, this is our volatility against the market. As you guys can see, we have a gravestone doji coming out, showing us that rejection to the upside, showing us that we are rejecting our 20. We are looking to see if we continue on with that rejection. Again, we have our UVXY for the first time curling here, as we have our dollar curling for the first time as well. So looking to see if we do cross our 20 below our 50 with the dollar would be very key for that continuation with strength. Again, we have our EMA lines that are crossing down here, but it does not mean that we're going to cross below the median of our MACD. Again, that could be that possible strength if we do not cross down below the median of our MACD. So again, looking for that confirmation if we are going to be looking for that strength and continuation on in the market. Again, if you're looking for that possible major bounce, that major reversal, we do need our EMA lines to cross down below the median of our MACD here on the VIX. So again, to recap, we do have our strong level that we mentioned again from yesterday at 380 that we were looking to see if we can continue on above. We are testing 380. We were looking to see if we can continue on above it, but as you guys can see, we have a small wick that is getting a rejection exactly at 380 for that possible gap again here that we had from our gap down from 380 to 385. So again, looking to see if we can hold 380 going into tomorrow, to see if we can hit 385 from that prior gap down is what we're looking for from here. But as far as that continuation momentum, again, that possible anticipation of a possible Fed pivot, then that could be that possible correction and taking away that anticipation like we did previously with jobs reports and with CPI. Again, higher than expected initial jobless claims, we took that back. And also here with CPI, we had higher than expected CPI. We took that back on anticipation. So again, just making sure that we do get that confirmation with Powell leading into next Wednesday's Fed rate hike will be very key. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts, we mentioned every single breakout that is worth looking at throughout the day in the Instabills room. Go to instabills.com in the description below, and you'll never miss a breakout like today again. And all of you Instabills that come over every single day and support the channel, I appreciate you guys every single day for coming over. Seriously, hope you guys are having a blessed day today. We will continue to go at it again. MULN and MOTS were the runners this morning out the gate, and just got to take what the market gives us in this market as we are leading to next Wednesday's Fed rate hike. Again, with Powell speaking after we have this anticipation that Rick Timmerose created after we were just about to sell off really hard here, we do now have anticipation that we are sitting on with no confirmation. So again, just staying cautious and taking what the market gives us. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.